Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today on AbraSilver Resource Corp, traded on the TSX.V under the ticker ABRA, and on the OTCQX under the ticker ABBRF. And I'm joined today with the President and CEO, John Miniotis, as well as the Senior Vice President of Projects and Development, Jeremy Weyland. And gentlemen, it's great to have you on the call to get an update on a pretty big press release you just put out this morning, and that is that you've put out an updated pre-feasibility study at the Diablillos project in Argentina. John, I do want to throw it over to you first, just in a big picture sense. This is an update to the economic study. There's a few new things that are kind of mixed in here with the RIGI, the tax incentives, and the better export duties, a little change to the CapEx. There's a couple of things, but the resource itself is essentially the same. It doesn't include all the drilling you've done the last 20,000 meters, but this is just an updated look at the economics based on a couple moving parameters. So walk us through from a high level the key takeaways for investors.
Sounds great. Thanks, Chad, for having us on here. Definitely looking forward to providing here an update on the results from this updated study. First off, I think it's absolutely a major milestone for our team. And I think the study results definitely demonstrate here the project's potential of truly becoming a low-cost, high-margin silver gold producer in the near term here. And so when I think if you look at the results, I think one of the things that really stands out here, the project really has robust economics under any foreseeable commodity price environment. So when you look at the base case prices we use, which we feel are still very, very conservative, the headline net present value, if you use a 5% discount rate, it's north of $1 billion Canadian, or just about 750 million US. And even if you apply an 8% discount rate there, you're talking about net present value of over 770 million Canadian, or over 550 million US. And we have, of course, a sensitivity table in the release where you can see how the economics improve very drastically when you use spot commodity prices. But importantly as well, I think we have a very, very rapid payback period here, just over 2 years, and the IRR under the base case commodity prices just shy of 30%. But again, you can see how the sensitivity we have at spot prices, IRR is just shy of 40%. So this is clearly a very, very high margin project. But I think importantly, another key takeaway here is that there's still a number of opportunities where we feel very confident we can continue to further improve the economics. We'll cover those here in a moment, I'm sure. But I'd say, from a high level, it just gives us a lot of confidence. There's still a lot more value left to be unlocked here, a lot more work to be done. And obviously, as we progress the project towards the definitive feasibility study, ultimately towards a production decision, we clearly feel a lot of value left to be unearthed here for our investors.
All right. Well, I appreciate that high-level summary, John. Jeremy, let's dive in here to get you into the conversation. I think the metals assumptions that you used were 2050 gold and 2550 silver. As John alluded to, if you look at the sensitivities table, these numbers really pop off the page. But the key takeaway, as you just mentioned, is this is a high-margin economic project that looks like it wants to get built here in the next couple of years. Walk us through some of the other metrics that relate to how the RIGI law, and this is the law in Argentina that changes the taxes and also the export duties, factors into this, but also the timeline that's behind getting those projects into that window where they qualify for those tax advantages.
Yeah, RIGI really presents us with a very interesting opportunity for this project. There's a window for qualifying for RIGI that actually opened up in July of this year, and it closes in July of 2026. So in that time, we need to apply for the RIGI benefits, and we'd probably do so once we've secured the EIA and we were far more advanced in the next stage of study. But then after receiving the approval or qualifying for RIGI, we'll have 2 years to spend 40% of the CapEx. And according to our schedule, it's very doable, considering the timelines that we have for engineering and getting in, to the next phase with an investment decision. So having that in hand by about the second quarter of 2026 puts us in a position to build the project and capture these RIGI benefits, which actually account for right now roughly on the order of magnitude about 30% of the NPV.
Well, and just dive in a little bit more to how these have changed from the last study now that these different tax credits and export duties not being there have factored into the project.
Yes, well, we've reduced the corporate taxes, brought them from 35% to 25%, according to RIGI, as well as eliminating the export duties on gold and silver, which were quite a significant part of the taxation in the previous model. So our overall taxation has come down from roughly, 900 odd million dollars to roughly $500 million, and that's really adding significant cash flow to the project. So those are really the key benefits, as well as one that's perhaps not quantifiable, and that's a tax stability agreement that will be in place over the life of mine. I believe it goes for 30 years.
And I think that's a unique aspect to Argentina that not every country does that. So the fact that you can lock it in and have certainty for 30 years is a big deal, especially for a mine that right now doesn't quite have a 30-year mine life. But hey, if you keep exploring, maybe it will. John, let's get you back in here to talk about one of the big changes here, and that is the overall CapEx. It is different than the prior study. Walk us through what factored into that. What's changing as far as cost and CapEx on the front end?
Sure. So yeah, with the new study, of course, we took the opportunity, updated capital costs, updated operating costs as well. I think some of the things that really stand out here on the capital cost side is, I guess there was some pre-stripping, where in the past we had not capitalized any pre-stripping, and now we are including that as part of the capital costs. Jeremy can talk about that in a bit more detail here. Additionally, on the capital cost side, I would say we're still assuming here that we would build our own solar plant, a 20 megawatt solar plant with diesel generators as backup. The capital cost for that is roughly order of magnitude, again, $40 million US or so. That's still being captured in that capital cost assumption. But we have a high degree of confidence that as this project moves forward, it will ultimately be connected to grid power. There's some discussions underway there, and we think those assumption that we would build our own power plant would likely be removed as we progress to the next phase of study. And yeah, maybe Jeremy, if you want to comment on some of the other capital cost items here.
Yeah, one of the tasks that we undertook for the review of the PFS, really a bottoms-up cost review and a schedule review as well. And then, as we optimize a bit the construction sequence of the project, we have a little bit more manpower loading at the site, and so we have more indirect costs to carry on the project. So that also contributed to part of the capital cost increase. And indirect costs are costs related to hosting those contractors at the camp. This is a remote mine site, so everybody comes in and stays at a camp facility. There's a significant cost associated with the busing and the catering and all those incidental costs that are associated with those contractors being at site. So that also contributed to our capital cost.
Well, and Jeremy, I think just let's dive a little deeper into the energy discussion. As John alluded to, if you could shave off 40 million by not having to build your own solar plant, that would be a boon because you did just bring on a strategic partner in Central Puerto that's a utility company. But you were mentioning that there's another component of power that you're looking at, and that is, the trucks themselves. They're running on diesel. There's still some potential optimization if you decided to switch to battery and ongoing studies where you'd have to weigh out, does it make sense to go to a battery operated fleet? So maybe dive into that a little bit more under the hood of just some of the things that are still in flux here around the energy component.
Yeah, energy is always a big opportunity for any mining project. As a rule of thumb, they're about 25% of total OpEx. And so energy, we think about energy, and that's fuel and electricity. And although we have a renewable power plant, there is quite a bit of diesel backup generation to support that plant. And operating one of those facilities at altitude does come with a penalty just because the air is thinner and those machines have a lower efficiency. So our power costs are quite a bit higher from what I'm seeing that we're carrying in this study than what we would be able to obtain in a long-term contracting market. So we would be comparing something like 15 cents a kilowatt hour from our self-generation facility to something that we would acquire perhaps at 10 cents or less in the long-term contracting market. And what would be interesting about a long-term contract is that there's a lot of solar potential in Salta in northern Argentina. There's really good solar resources in that region. There's quite a bit of investment going into solar projects in Argentina. So the project would stand from benefiting from, perhaps, if we can, secure this for the feasibility study, and we are confident that we will, lower energy costs, as well as potentially energy sourced from renewable sources. And with that in mind, as we're optimizing the mine plan and doing fleet trade-off studies, bringing in battery electric vehicles could also present another opportunity to lower, or if not eliminate, those diesel costs from that fleet, and then have a fleet that's powered by renewable energy. So these are some of the opportunities that we're going to be exploring in the next phase of the project.
Yeah, so definitely some chances to not only optimize the efficiency and the economics, but also probably a little bit greener footprint, a little bit better for ESG with a battery fleet charged off renewable power. But that'll all be factored into the feasibility study as you continue to do work. John, let's also talk about just what people really want to know about on this call, probably. How are we going to get the metal out of the ground? You've got a processing plant here designed for 9,000 tons per day. It says it plans on running 350 days per year. Just walk us through the flow sheet. How will this, is this kind of a known process? How complicated is it? And how good are the recovery rates based on what you've looked at thus far?
Yeah, so again, no real change there whatsoever. And so this is really just an updated pre-feasibility study. So of course, the prior pre-feasibility study was completed earlier this year. It assumed the agitated leach plant, 9,000 tons per day. Gold and silver recoveries remain more or less unchanged. So no changes at all to the real design of the plant here. And again, I think that really just shows the opportunity ahead of us is that we could, down the road, obviously look to incorporate heap leaching in addition to the current agitated leach plant that we have. And so we are still treating anything below 45 grams per ton, silver equivalent, which is the cutoff grade. We're treating all of that as waste. And so we're not, and we do have a very sizable amount of sort of marginal material here that we feel could be processed through something like a heap leach pad. And so that is still an opportunity that we're continuing to do more work on. We think at current gold prices, for sure, we feel very, very highly confident that that could add to the economics of this project. And so again, some additional test work is required to bring that into sort of the design plan here. But for this study, it was a simple update. And what's important is it did not include any of the recent drilling that we've been doing. So the current phase 4 20,000 meter drill program, which is underway and of course going very, very well for us, has not been at all reflected into this mine plan. And so that's, again, all going to be completed in Q1 of next year, on track, on schedule there. And then once that's completed, we'll be looking to update the reserves, and then this project will go towards the definitive feasibility study as the next stage.
Yeah, I think it's such a key point, John, just because you guys continue to find mineralization at the Jack Zone to the southwest, and you've continued to push the Oculto Zone up to the northeast further and further out. And you still have areas like Cerro Bayo that could have some nice both silver and gold in there to keep changing the optimization as you work towards the feasibility study. Just another thing I want to bring in here is also that these are always a snapshot in time. So some of these assumptions that are used, we will get updates as we go further in. But Jeremy, is there anything else that you want to highlight as far as the sustaining capital? Has that changed at all? Everybody looks at the CapEx, but really, what does it take to keep the mine running years 2, 3, 4, 5, and beyond?
Yeah, we've updated sustaining capital to reflect some revised costs for those tailings lifts at the various stages. We got 5 stages for tailings. And just along the same lines of our update to capital costs, some of those same cost pressures we did see on sustaining capital, but it was only a fairly minor increase to what we previously had. But one thing I think just to point out with respect to capital is that in our initial capital, we previously didn't have any capitalized waste in that headline CapEx number, and now we've got about $50 million associated with capitalized waste, and that's because of our change in mine plan that we're now bringing forward that shallow gold zone in Oculto. And in the previous plan, we were pre-stripping the jack zone, and that material is being used as backfill for the plant. So that wasn't showing up as capitalized waste. So now we have some capitalized waste. So that's bringing forward basically some of that what was previously OpEx in the mine plan is now CapEx in the revised PFS.
All right. And then I guess just let's keep it big picture here, guys. And just, John, as we wrap up, you got the definitive feasibility slated for the first half of 2026. So that means you still got a lot of work between now and then that the team is doing and has been doing. I guess wrap us up with like a big picture look at what the key catalysts are moving forward, some of the work that will be incorporated into that DFS, and just anything else you want to mention from a big picture about the Diablillos project as a whole.
Yep. Great. So yeah, in summary, look, I'd say for this updated pre-feas, it really builds on, I'd say, the strong foundation from our previous study. I mean, demonstrates clearly we have a project here, very, very positive results. But yeah, as we mentioned, I think what we're most excited about is that the outlook is extremely bright here on a number of fronts. First and foremost, the exploration campaign, of course, we expect lots of additional drill results to be announced as those come in. So we continue to have 3 drill rigs operating there. We're drilling at Jack, drilling at Oculto Northeast, of course, promising potential, both those areas. And importantly, we're also now drilling that porphyry complex, which is still at Diablillos, about 4 kilometers to the northeast. And we expect some of those initial results to come in very early on in the new year, likely in January. So a lot to look forward to here over the coming weeks and months ahead on the exploration side. And then next year, of course, we'll continue to drill, but in parallel, we'll be advancing this project, looking at some of these optimization opportunities. So doing more work on things like the heap leach, some other trade-off studies where we feel we can continue to add value. And then moving this project forward, we think by the end of 2025, we should have our EIA permit approved, which would be obviously a very, very significant milestone here for this project. And then shortly thereafter, we'll have a feasibility study, which will be a bankable study. And then you can apply again for RIGI early in 2026 and looking to make a construction decision here in the near future. And so this is a project that we feel is already very robust, but still, importantly, lots of opportunities to continue to unlock value here.
All right, gentlemen, we'll wrap it up there for today. But yeah, lots of drilling still ongoing. The deposit is still growing. It's not closed off in any respect. And you still have the potential to make those copper, gold, porphyry discoveries 4 kilometers away with one of those 3 rigs. So there's a lot of value drivers on the exploration side, but then all the optimization that can be going into things over the next year and a half. And you're getting close to hitting what they dubbed the golden runway, but in this case, it may be a silver gold runway for AbraSilver, getting near that final phase where you head towards a construction decision. So a very exciting time for the company, lots of catalyst on tap, and we'll keep following along with it here at the KE Report. For those listening in, if you want to follow along with all the news from AbraSilver, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section. You can sign up for news updates there or just follow along with the news as it hits the wires. And John, Jeremy, we'll get you back on for an update when some more news breaks. Appreciate you coming on the KE Report. And as always, looking forward to our next conversation.
Thanks very much.